Now, Rita has written in. She's 36 years old. She's working as an IT professional with an income of 33 lakh rupees per year. Now, she wants to invest 38,000 rupees a month. And she says she has a very low risk appetite. She would like to invest in debt funds, but she's picked a couple of mutual funds and she wants us to help her decide if her portfolio is on track. Now, the first on her list is the IDFC Premier Equity Plan. Dhirendra, this is a good performer, but for someone with a low risk appetite, do you think this suits her needs?
If you're watching your investment every day, it can cause great deal of anxiety. But IDFC Premier Equity, despite being a mid and small cap, focused fund, or the way its portfolio is constructed, I don't think it's a very risky proposition.
All right, the next on her list is the DSP BlackRock World Gold Fund, Dhirendra. Now, this is a risky proposition. Would you recommend she continue investing in this one?
This particular fund is something which will be hurt much more than the gold prices, and that is how it is designed. This is a high octane version of the gold price. Gold prices go up by 10%, it will go up more than 10%, and if it falls by 15%, it will fall much more, and that will get reflected. That is the reality that has been visible so far in all the interim corrections and surge we have seen so far. So this could be risky. Be watchful. Work on your stop loss, and or keep out of it altogether, maybe.
Right, the next couple of funds on her list are the Franklin India Blue Chip and the HDFC Top 200. I want to take these two together because they're both large cap funds. They're less risky than the equity diversified funds that are multi-cap. Would you recommend someone like Rita with a low risk appetite should be investing in these funds because of their low risk taking as well?
I would say that, blue chip also gets disappointing on occasion. So if you're watching it every day, also the HDFC Top 200 is a large and mid cap fund, while Franklin Blue Chip always remains a large cap fund. But there has been occasion in the past 5-6 years when we have seen that a large cap fund has struggled, while mid cap funds and large and mid cap fund, a more diverse fund, has done more consistently better. I would say that if you are genuinely conservative, then get out of all these funds, be into a balanced fund. It will give you a much smooth ride, and you will be able to participate in the growth of the market as and when it happens.
The HDFC Equity Fund, Dhirendra, would you recommend someone with a low risk appetite go into a fund like this? It
gets very turbulent on occasion, and it can be out of favor for a brief while. As I was saying, that be into a balanced fund. And for a conservative investor or self-proclaimed conservative investor, this may not be a great choice.
Right, Sundaram Select Mid-Cap is a mid-cap fund, not one of the best mid-cap funds, but a good one. Would you recommend she gets out of this one as well?
Again, this fund, going by what she has already stated, it's a reasonable fund, but certainly not of the kind given her profile.
The last on her list is Reliance Growth. Would you recommend she continue investing in this one because it doesn't really suit her risk appetite?
Oh, this is certainly a certain sell, because one is that it may not be a good fit in her portfolio or for her needs. That apart, I think it has been an average fund for a long period now, for a while now. A tentative market, market rally, which is fairly constrained with great deal of apprehension. This fund will have to wait for it to do well as it used to do 5-6 years back.
You did talk about the fact that Rita would do best to invest in a balanced fund. Which balanced fund would you recommend that she pick right now?
For somebody who is conservative, wanting a steady take on growth, I would say something like DSP BlackRock Balanced Fund or a UTI Balanced Fund, where the equity allocation by its design is always into large caps, and the 35% equity of fixed income allocation provides the stability. That's one. If you are trying to optimize or enhance, be aggressive with it, then maybe HDFC Prudence or a Tata Balanced.
All right, a quick review of what we've learned on this segment. Remember, we're going to relook at all of our ULIP investments this week, and we're going to decide whether or not we want to continue investing in those funds. Dhirendra, they're telling us that if we have a time horizon of less than 3 years, then we should be considering fixed income and not looking at equity for those investments. And finally, if you are a risk-averse investor, make sure you pick a conservative, balanced fund.